The term sheet hits your inbox at 11:47 p.m. You've been awake since 5. The numbers are wrong. Not catastrophically wrong, just wrong enough that someone senior is going to notice. And when they do, they're going to look at you, not with anger, with something quieter than that. Disappointment engineered to make you feel small and replaceable. You fix the numbers, you send it back. You don't sleep. This is how it starts. Level 1, the analyst. You are 23 years old and you already know what it means to disappear inside a building. You arrive before anyone else and leave after everyone's gone. The office has a specific silence at 2 a.m., a hum of climate control, and the ghost pressure of deals that closed before you were born. You make $95,000 a year and spend most of it on caffeine and dry cleaning. Your job is to build models, financial models, DCF, LBO, comparables. You build them with a precision that borders on obsession, because one wrong formula, one mislinked cell, cascades through everything. A $400 million valuation shifts by $30 million because you forgot to toggle a tax rate assumption. Nobody explains this to you. You learn it the hard way. You don't have opinions yet. You have outputs. The associates above you treat you like infrastructure. You are the plumbing, functional, invisible, expected to work. When you do your job perfectly, nothing happens. When you make an error, you feel it for weeks. You tell yourself this is temporary, a stepping stone. Everyone starts here. That's true. What nobody tells you is that the stone is designed to cut. Level 2, the associate. 2 years in, you understand the language now. EBITDA margins, leverage ratios, entry multiples. You don't just run models, you understand what the models are saying. You can walk into a room with a 40-page CIM and within 20 minutes know whether the deal is real or theater. Most of them are theater. You manage analysts now. You feel the shift immediately, the way they look at you, waiting. You remember being them. You remember the specific loneliness of not knowing what you didn't know. You are not kind to them, not cruel, just efficient. There is no time to be kind. You close your first deal, a mid-market logistics company in the Southeast, $180 million enterprise value, 4.5x leverage. The economics look clean on paper, and your vice president takes the credit in the partner meeting. You don't say anything. You learn. Credit flows upward. Blame flows downward. This is the first unwritten rule. You rationalize it as apprenticeship. You are still learning. There will be time. Level 3, the senior associate. You have been in the building long enough to know where the bodies are buried. Not literally, figuratively, which in private equity means the same thing. You know which portfolio company is underperforming against projections. You know which partner oversold a thesis to the LP base 18 months ago. You know which deal was closed out of ego, not economics. You know these things and you say nothing, because information here is not currency you spend, it's currency you hold. Your compensation clears $300,000 with carry participation beginning to vest. The number sounds significant until you realize how many of the people around you have already stopped thinking in those terms. They've moved to a different ledger entirely. You are starting to understand what this industry actually sells. It doesn't sell returns. It sells certainty, the illusion of control over outcomes that are fundamentally uncertain. You sell that to institutional investors, and in a quieter way, you sell it to yourself. You're still buying it. Level 4, the operator. You run deals now, not just support them, run them. You manage the process from LOI to close. You coordinate the lawyers, the accountants, the management teams. You sit across from founders who built companies over 20 years, and you tell them calmly that you need the number to move. Sometimes they push back. Usually they don't. You've gotten good at reading a room. You know when to press and when to let silence do the work. You know that most people will fill silence with concessions. You learned this by accident in a negotiation call, and you've used it deliberately ever since. Your identity has been quietly replaced. You notice it in small moments: dinner with old friends from college, conversations that feel like you're speaking across a distance that has no name. You don't talk about your work in specifics. It becomes easier to not talk about it at all. The deal flow is relentless. Every quarter, another acquisition target. Every month, another management presentation. The companies start to blur, not because they're the same, but because you've trained yourself to see them as variables: revenue lines, cost structures, exit multiples in year 5. People run those companies. You know that. You just stop leading with it. Level 5, the principal. You source now. That's the difference. You're not waiting for deals to arrive through the process. You're building relationships that bring deals to you before they're broadly marketed. You have a network of investment bankers, CEOs, operating partners, consultants. You tend it like infrastructure. You closed a deal last year that generated $60 million in carry for the fund. Your share of that was personal, significant. The number doesn't excite you the way you thought it would. This is the first moment you recognize something uncomfortable. The goal was always the next level, not the current one. You have been moving through rooms your entire career, and you have never once stopped to actually inhabit one. You don't examine this for long. There is another deal on the table. A manufacturing business in Ohio, family-owned, third generation. The founder's son wants to sell because he doesn't want to run it. His father built it over 40 years. You walk through the facility, see the employees on the floor, and you know with complete certainty what you're going to do with the cost structure post-close. You write the investment memo anyway. You write it cleanly. Level 6, the managing director. The partners listen when you speak. Not all of them. 2 of them still see you as someone who hasn't paid the full price of admission, but you know something they don't. Patience is leverage. You have been watching how this firm works for 8 years. You know where the consensus cracks. You sit on 3 portfolio company boards. You make operational decisions that affect thousands of employees at companies most people have never heard of. Your name doesn't appear in press releases. You prefer it that way. You have a reputation in the market now, specific and earned. Bankers return your calls within the hour. CEOs take the meeting. You have learned that reputation in this business is not built on what you say. It's built on what people have heard you didn't say. Discretion is the highest currency. Your personal life has narrowed to a manageable width. You have learned to work within it. You have stopped expecting the 2 things to coexist comfortably. Level 7, the partner. Your name is on the fund. Not the building, not yet, but the LP letters include your name in the investment committee section. The institutional investors who allocate billions to you have looked you in the eye across a conference table and decided you were worth trusting. That trust has a number attached to it. You have raised $2.3 billion for Fund 4. You make decisions now that you will not see the full consequences of for 7 to 10 years. You are managing time horizons that exceed most people's career lengths. You think in vintages. You think in cycles. The market you're operating in today is a version of a market you've already lived through twice. The analysts who work for you now are the age you were when you started. You watch them make the same mistakes in a slightly different form. You don't intervene. The mistakes are part of it. You know this. You let it run. You are not cruel. You are just no longer surprised by anything. Level 8, the founder. There is no one above you in this building. You built this firm from a $400 million first close in a conference room you rented by the day. It is now a $14 billion platform with offices in 3 cities and a portfolio that spans 6 industries. You have been doing this for 22 years. People write about you in ways that feel like they're describing someone else. A version of you abstracted from the actual experience of it. The failed deal in year 3 that almost ended everything. The LP who pulled their commitment 48 hours before close. The portfolio company that went to 0 and took 3 years of carry with it. The profile pieces don't include any of that. They include the compound annual return. You sit in rooms now and you say very little. You don't need to. Your presence is the signal. When you lean forward, the conversation changes. When you leave the room, the decision follows you out. The isolation at this level is not dramatic, it's quiet, a gradual narrowing of the people who speak to you without calculation. You are aware of it. You have made your peace with it. You didn't get here by accident. You got here by compounding every decision, every compromise, every traded loyalty, every relationship maintained past its natural end. You built this the way you build anything in this business, systematically, without sentiment, over a very long time. You walk through the office sometimes in the early morning, before the analysts arrive. You watch the empty desks. Somewhere, right now, a 23-year-old just accepted an offer letter from a fund they've been trying to get into for 2 years. They're already running numbers in their head, already mapping the trajectory, already certain that they understand what they're walking into. They think the job is about deals. It isn't. But they'll figure that out. They all do. Eventually.